All right, guys, what is happening? Happy New Year, everybody. It is January 1st, 2024. My name is Carlos Garcia, founder and CEO of GAR Capital. Glad to be with you with another year. In October will be year 10 of GAR Capital. So this is our 10th year, in a sense, not yet, kind of talking about the markets with you. And we're glad to be with you. Hope everyone had a happy and safe New Year's Eve out and about. Maybe you're not too hungover, but sorry to say, it's back to work, team. It's a new year, new goals. Let's go ahead and get started. This is the video recap of last week. So again, we got a ton of content coming, guys. We got the top 10 stocks of 2024. I know everyone is excited for that. How about the year in review and the year preview? We're going to do that as well. We're going to talk about some of the macro, some of the things I'm looking for 2024, and also recapping 2023. We'll kind of tie that in together. I'm also going to go ahead and do the video recapping the 2023 top 10. As you know, we posted that on Instagram as well. Again, if you want to take a look, kind of a little back in time, we did a revisited video of the top 10 stocks of 2023. But again, I think everyone is interested in the top 10 stocks of 2024 and what we're going to talk about. We'll also do the GAR Capital preview of the year, like I said. We'll recap that year and so on and so forth. So Investment Club will also do a video down the line for sure in January. I know everyone's doing well in the club. Congratulations on all your gains. Again, we still have work to do. I know we can't just rest on our laurels. So it's a lot to get to. The first thing we start with is the last week in review. So let's go ahead and talk about it. Bringing up the Discord channel. As you know, if you are interested in joining, make sure to take a look at the description box below on our website. It is free for all, the live market blog on our Discord. All right, so let's go ahead and see it. 2 for 2 this week. Ended the week on a good note, positive note, and it was just semiconductors. It was Intel and AMD. AMD got as high as around 130%, and Intel hit the runner as high as 55%. So again, the week before, as we know, was Grinchmas with that Wednesday move, but to end the year on a strong note, that's something that I'm pretty happy about for the team. You know, kind of get that momentum going into the new year. The week before wasn't the best. November was excellent. Again, we're going to recap the whole year together, and I'll do that here on YouTube as well. So we won't go too much details in what happened before, but again, this is the last week that we just had Intel and AMD 2 for 2. Pretty easy stuff. Futures did pretty well as well. So again, all around solid. So let's just go over them together. We'll start with Intel this week. All right, let's go to Intel. We're going to bring up the last 5 days. Let's go bring up the last 10 days. And what we want to see here, again, date of entry, the 26th of December. So we know that was, I believe, if I have my calendar, you know, the week before, the week between Christmas and New Year's is always kind of weird. That's usually the case. You know, let me just get my phone. It'd be a little easier to bring up the calendar this way. The 26th was a Tuesday. So here we go, Tuesday. So this is where we entered. I don't have the exact time. Just a heads up, next year, I'm going to go ahead and actually put like the time that we got in on the date of entry. I'm going to put a lot more notes on the highs that it got. Obviously, with the runners, we'll track that, but how low it's got so we can really deep dive into names that, for example, was it down more than 80% at a certain point? Did it come back? Was it how low did it get before we got to where we wanted to go? Again, that's going to give me a little more data points to really analyze for the future. And again, the goal is to really never have losses again, never have a losing trade again. And I think the more we record the information, it gives us that ammo, it gives us a little bit of that kind of intel, no pun intended, intelligence in order to move forward on what we're trying to do with the contracts. Hey, you know, we noticed that this stock does have big drawdowns. This one doesn't. This one is a little more volatile than that one. These days, that days, how short of the time frame. Again, it's all moving parts, and the idea is to record it all. So again, we want to record all the data that we can for you guys in the future. So when we do these recaps, we'll know exactly what time we got in, what time we got out, etc. Now, we could always check as well by updating the spreadsheet with the time that we got in. Again, the good news is that putting the time that we got in, the actual trade, isn't that difficult because we have the Discord giving us the timestamps. So for example, on Intel, let's see if I can find this trade. This is at 9:39 in the morning on the 26th of December. So let's go ahead and take a look at it. So that's about 10 a.m. Here's where we got this boost. So we got the boost right at 10 a.m., continued higher. Again, we were looking at the daily as well. I'll go ahead and bring up the analysis. So again, we got into 50 calls, 137, again, closed in the money. I'm pretty sure everyone took that. We'll go to Watchlist and charts and take a look at Intel. So Intel broke alert, breakout last week above 48.5. We played the 50 calls targeting the gap fill of 51.20. Keep an eye on this one. Thank you to Nick for posting that. And we went ahead and put all that info in there. 4,700 involved. We did the 19, so we bought time. This has not expired. Like, my apologies, but it is in the money. So you can see 51.28 was tagged, but again, the 50 calls, what we got in. We're at 15 a quarter. So then nice pop to here. I want to see. I don't have the time exactly where we got out as of yet. Let me go and see the exact time that we got 40%. So literally same day, 11:31. Feels so long ago. Same day, we got in this pop here, 10 a.m. and around 11 a.m. we got right out here, right at 41.88. So again, it wasn't in the money when we got out that signal, but again, it continued to move up all the way to 51 and a quarter, and then we just kind of slid around, as we know, as Wednesday's volume dropped, Thursday's volumes dropped, and of course, New Year's Eve. The actual last trading day of the year before New Year's Eve was the volume was absolutely low, very choppy. So we did the right thing. Obviously, we got what we got, and I'm pretty happy for it. So there's your gains there, and we got it the same day. I love those for everybody. AMD, we went ahead and filled on the 26th at 2:53 p.m. So let's go to AMD. We got there on Tuesday at 2:53 p.m. Here it is, the move. Overnight, pop on Wednesday, continue to go higher. Thursday's where we got that move. And then Friday, literally first thing in the morning, we dropped down to 447. So it's a little bit of a sell-off here, but this trade still looks great. I mean, it's close for everybody other than the runner. And you could see on AMD, we got as high as, again, at 335 is when we got out. Literally, we got in the next day. So about a 24-hour trade, 36%, no point in winning in 4 points. Again, I was just happy that everyone got it. So again, this was the 27th. That was a Wednesday. Low volume chop. Again, we don't want any reversals. And what happened on Thursday? We got that big boost on AMD. And that's, wrong one. That's the spreadsheet, but we're just doing by this here, by the actual Discord. So got as high as 125%. And remember, guys, this is for this week's expiry. So they are in the money as well as Intel, but Intel expires on the 19th and AMD expires this Friday coming up. So well done across the board. This is exactly what we want to see. Does AMD have a little more juice? Well, it's near all-time highs. Not quite there yet, but it looks like the trek is going as we kind of continue to march to 164.46, which is what I expect coming into next year for AMD. You're talking about another $17 or so for AMD to move a little higher to all-time highs. So great trading all around. I'm very happy for it. Can't say I didn't expect anything less. I expected us to come back and be resilient and at least have no losses and a couple of winners for everybody to start their new year right with. All right, let's go ahead and talk about, it's probably going to be a quick video, as you know. So let's go ahead, because there was not much trading, and it is a short week this week too, guys. Let's be real. Today is Monday. The market's closed. So here's the past 5 days here in terms of the major indices. The Dow's up 0.81%, S&P up 0.32%, NASDAQ up 0.29%, and IWM down 0.38% for the week. So that's basically your main indexes and what happened this week. Again, short week, we know what it is. That's what's happening currently. Again, we have one more week of this short week, kind of the same thing as last, with Monday being Christmas, Monday being New Year's. This is just what it is. So again, let's not have tons of expectations on a short week, but doesn't mean we can't do some good work as we've shown this past week. Let's go ahead and take a look at the upcoming macroeconomic data. In terms of earnings, the only one that stands out is Walgreens, Boots Alliance, WBA. They report, I believe, on Thursday. But other than that, it's not much anything that we would be concerned with in terms of our trading. So here we go for the week. In terms of Monday news, there ain't nothing. Everything's closed until 6 p.m. Today, we have futures opening. Tuesday, we have nothing going on. But on Wednesday, FOMC member Barkin will speak at 8:30 in the morning. ISM manufacturing PMI, JOLTS job openings. That has been a market mover here and there. ISM manufacturing prices, and FOMC meeting minutes. That will be on Wednesday. So maybe, a little bit kind of a Fed-centric, job-centric. As we know, this week is non-farm payroll on Friday. But before that, you have the private payrolls on Thursday. with unemployment claims. And again, we're really focusing on the labor market. So far, so good across inflation, across wages, across of consumer demand, retail shopping, home sales, auto sales. Really good stuff, really good news that we're seeing. What we want to do and what we want to verify is that is there any cracks in the labor system? Meaning that is there starting to see some layoffs, some more job openings, less job openings, more people claiming unemployment. Why is that important? Because if we are seeing that crack in the labor market, the rate cuts are going to come more accelerated, meaning that they're going to come a lot sooner, maybe even more. That's not something we would want. Obviously, we want a strong but yet balanced labor market. If labor was too strong, wages go up, inflation goes up. But right now, we're kind of starting to get to that soft landing, that Goldilocks scenario, very similar to the Alan Greenspan late 90s, 97, 98, kind of the Reagan 80s boom as well, where rates were being pulled back from those highs. This is the time where mortgages were double-digit interest rates, where gold was incredibly high and all that good stuff. Oil was high as well, gas prices, but we're starting to see crude oil come down. We're starting to talk about gasoline and a death cross. So is crude. Energy stocks are coming down. Gas prices are going down. It seems to be that soft landing thing that the Fed was talking about, that Goldilocks scenario. But now we just want to make sure that the jobs market is doing their job, meaning that as long as the job market is stable, I think the Fed will cut rates in March. But I don't see them being so accelerating doing it. They're not going to be going out of their way to do so. Now, sidebar here, you know, let's be real. This is an election year, 2024, presidential election year, senator election year, House of Representatives, all these elections that are coming up in November. Let's be real. Let's be pragmatic here. I don't think the Fed is wanting to raise rates during a election cycle. I expect them to fully cut rates as well, but not as much as people think. The good news is that inflation is coming down, so we should see this kind of good news snowball effect as long as labor holds up. If labor pulls back, meaning there's a lot more people claiming unemployment, a lot more jobless people, that's where the Fed panics, especially in an election year. We don't want unemployment ticking up. Rate cuts are going to come faster. What does that mean? Again, we'll preview that in the next video. Obviously, we're going to keep an eye on the dollar. We're going to keep an eye on interest rates. That's going to be the key moving forward for any continuation. But again, I digress. Let's keep it forward with this week only. Average hourly earnings, we have that coming up. Non-farm payroll on Friday. That could be a market mover, as we know. And we have ISM manufacturing PMI, again, the surveys. We know the drill. PMIs are surveys. And FOMC member market speak. So two Fed speakers, Fed meeting minutes on Wednesday, and we have non-farm and labor-intensive news is what we got. So we do got some catalysts. It's not like it's going to be a quiet week, but again, we're going to be smart moving forward. So there's not much to say when the S&P is near all-time highs. Boy, were we close on our call for June, but 48.18 is the all-time high on the S&P. Pretty darn close at 47.69. We got as high as 47.93 on S&P spot. Now what? Well, the real deal is to see coming into January is that do we get this continuation? Do we get this kind of good vibes, good feelings, with the consumer confidence going up, gas prices going down? We know the drill. Dow is at all-time highs, NASDAQ at all-time highs. Small cap still back there. We know still needs to come up. And then, of course, the S&P is right there near all-time highs. So all is good, right? Once you hit the level that we want, think of it as being, someone that's going into the gym to get in shape, right? You get more gains really when you lose weight, in a sense. When you go to the gym and you're out of shape and you're trying to get back in shape, you're going to see those gains rather quickly. You're going to start seeing your body starts changing. Maybe your arms get a little bigger because, you're just getting back into it. So it's kind of like those front-loaded rewards in the beginning. That's kind of how it goes when you're someone that's out of shape trying to get into shape, right? Same thing with the market. Here's my analogy. In October of last year, any little bit, we get a little pop higher. Again, it took a little bit of time. That's the market getting into better shape. But here's the question. Ask anyone who's in great shape. I am not. But for those who are in great shape, what is harder, to lose weight or to maintain it? Maintain it, you have to be on point, right? Any cheat meal, anything bad, any deviation from your habits, what happens? You kind of get back to where you were before. So again, it really is in a weird way, in a perspective way, maintenance. All we want to do is make sure that the Goldilocks scenario that we have now stays there. We got the gains. We see the market near all-time highs. Maintenance. This is going to be the year of maintenance. The market is in great shape. It's shredded. It's got big arms. It's got a six-pack. Now it's just got to maintain it. In 2022, we were fat slobs, obviously, with the market pulling back with that analogy. But now it's in good shape, right? They're shredded, they're feeling good, they're eating right, they're doing their cardio, they're lifting, compound exercises, writing down everything. The key is the maintenance. But it doesn't take much to maintain the stock market. Really, the only thing we don't want is deviations from expectations. What do I mean precisely? The labor market. As long as the labor market stays where it is, I think the trajectory stays the way it goes. We'll probably have a correction this year. It's not going to just straight up all day. We know that. Does not green shoot. But again, slow and steady rides the ship. Very Goldilocks scenario, very similar to the 90s, late 90s with Alan Greenspan, Bill Clinton's economy. And the real reason I say that, maintenance is the fact that there is an alternative. Remember the saying, there is no alternative, TINA, when it comes to stock market, when it comes to low rates, there is alternatives. Bonds. We talked about bonds. Now bonds, rates going down, that means bond prices are going up. There is demand on government bonds, demand on investment grade bonds, demand on junk bonds or high yield. The key that we're seeing is that we don't have to invest in the stock market to make money anymore. This is the first time that we've had that since 2009, where it's not propped by cheap money. And this is a really good sign. So again, we're back to maintenance. This is what we want to see moving forward. So what can we do here? Again, a short week. I got a couple of names that I'm watching, but in terms of the market, I expect really just sideways action, maybe a little pop here and there. Maybe SPX gets to all-time highs, but other than that, I would not expect the world on a short week, even though we have some catalysts. So let's go over a couple of names that I'm watching. This will be part of the watch list for everyone on the blog. Goldman Sachs, again, we're going to talk about this on the recap video and the preview of the following of this year, 2024. Banks. I'm going to talk about banks a lot. Goldman Sachs is really the best looking one here. Again, I'm having a level at 388.75. My target would be 400. That's where I expect the most of the volume will be. If we get more volume on 395s, I'm with it. Might be a little expensive, but again, we just want to break those November highs of 2022, and then we could see if we can get continuation up to 426. But you could see breakout is imminent on Goldman Sachs. Love the name. Keep an eye on it. Amazon, we have a gap to fill again, like we spoke about, 163.06. We need to break the highs of 155.70. Again, this is on the weekly. Let me go ahead and bring you the daily team. There you go. You have your gap to fill at 163.06. The idea is just to get us there. We don't have to do the 163s. We could always do with a break of 155.70. We could do the 158s to 160. Again, guys, if anything, we're buying time like we bought last week, January 19th, January 7th. That's kind of what we're looking for. We just want to buy time for any of this crappy chop that we got like on Friday. That's just going to kill premiums. So again, we don't want to be, kind of punished for doing our analysis just a little tad early. We want a little volume. So again, we want to buy something that we can sell as soon as possible. That's options trading, obviously at a profit. And then last, but certainly not least, good old Microsoft. Microsoft did pull back, held support. We're above the 20-day moving average, looking for 377.74. And if that breaks, again, we're just going to target the recent all-time highs of 384.30. So again, I'd be looking at the 385 calls, 380 to 385 calls. If we get a break of 377.74, Microsoft should have some nice volume. And if you look on the weekly, oh yeah, does this look like a cup and handle? And we got a little more to go on Microsoft. Great company, as we know, one of my faves. But that's where we are for the week. Again, not much to speak of. We do have some catalysts coming. We're near all-time highs. So again, it's kind of tough to really say, yeah, we're just going to continue on a short week with possibly no volume where everyone's hungover, no one's going to the office, for example. Yeah, kind of hard to have that. So the real week starting will be the week after, which is January 8th. But again, we're still in that kind of 2-week, I don't know where I am, what time do I wake up, my habits are changing, of Christmas to New Year's. Always fun. Kind of gets you away from your usual kind of disciplines, but have no fear. We are here to help in any way we can. So 6 p.m. today, reminder, futures will be back open. So we will let you know what's going on there. And of course, back at it tomorrow with the morning note. I got a couple more videos to do for you guys. Again, be on the lookout for those videos. Keep it subscribed here on our YouTube channel. If you're not on our Discord blog, make sure you take a look at the description, go to our website and sign up. We'd love to have you there. Thank you guys for making it a great 2023. Let's make it an amazing 2024 and let's kill it together. Can't wait to get started as we just took the first step. We will see you guys for Futures Open at 6. Cheers all.